tech stocks have seen a rebound on Wall Street, but worries over inflated valuations remain as the first quarter earnings kick off. Gary Booysen from Vunani Capital is with us in studio again. We've just spoken to you a moment ago. Gary, before we go into tech stocks, what did you think of this Theresa interview? I know you were watching it.
No, it seems very convincing, but CEOs are always convincing. It's their job to sell their company and their vision. I think he did a good job of it.
And the family's good at it, so I mean, Febos is in that stream. Interesting.
It's nice to see, obviously open cast mining, platinum mining especially, it does well. It does well. I mean, if you look at Amplats Mogalakwena, I mean, it's a fantastic asset for them to have. It's like I said, if you've got a platinum price strike because of supply constraints from underground mines, it's the open cast ones that are going to make all the money. So it's probably one to watch. I'm going to go and like I said, I mean, we looked at it very briefly, but I mean, it's one I think I'm going to go dig into it and see if there maybe is an opportunity there.
We want to look at the platinum side of the media sector, which is social media, technology stocks. This whole raft of new listings, we're now starting to see the results. What are you making?
Like I said earlier, I think that is specifically taking advantage of very, very extended valuations. I mean, if you look at the Nasdaq as a whole, it's not which is obviously pretty much tech and pharmaceutical, very, very heavy weighting. I mean, it's actually not particularly expensive if you look at the medians. I mean, the PE of the Nasdaq, I mean, forward PE is only about 18 times. The current PE is only around 20. So it's not. I mean, that's almost comparable with our market. It's not necessarily massively inflated, but it's if you look at those, there's in that if you look at the Nasdaq, so sort of the top 100 index. 6 of those have PEs of above 100. I mean, you're looking at Amazon on a PE of 500 and sort of mid 500s. I mean, and now that you were mentioning earlier, can the human mind actually price in exponentiality? That tells me it must be true, because to go and pay sort of 500 times earnings for Amazon, I mean, you've got to assume that those earnings are going to be pretty spectacular when they come through.
But how do people do that? If you're an analyst and you're looking at Amazon now, and you've got to say, at this price, it's worth buying. What kind of calculations do you put into your Excel spreadsheet?
Yeah, that's the thing. I mean, it becomes almost more art than science, because you don't have earnings to work with. You've got to say, oh well, they could potentially buy this. They've got a massive amount of cash that they can invest, so that would improve our recommendation. But I mean, it's interesting to look at the analyst. I mean, then again, it's sort of I just did a quick quant and ranked by analyst expectations. So these are sell side analysts that come out with official target prices, etc. I mean, out of the 100 stocks, there are only 2 companies in the Nasdaq 100 that have more sells than buys on it. So you can see that the analyst community is incredibly positive about the sector. I mean, there's a huge amount of positive recommendation coming out. And I mean, that in itself, if you actually look at the sort of the median targets that those analysts are posting, I mean, you're only looking at probably those are price targets. I mean, over the next 12 months, I think the stock that's going to sort of accelerate the most. I've got it down here in all my notes. So, but I mean, you're looking at probably 6 or 7 stocks that are going to appreciate share price wise, forecast about 35%. So I mean, that's not enormous. That's not a huge share price appreciation for something that's valued, at 500 times earnings. So, for me, it does. The market does look fairly bubbly, I think, and I think that's why you're seeing these IPOs coming down. Obviously, now as a trader looking at that market, it becomes very difficult, because you suddenly you don't have those fundamentals to say, oh, this is going to continue to make money. You're pricing in future earnings. So when the market does start to slide, you start seeing the panic as investors just dump the stocks. And I mean, that's why I think the recent slide that we're talking about here, I think it was the worst since 2011, lost sort of 6%, 7% in 3 days. But I mean, some of the stocks are really getting slammed. I mean, we've seen Naspers sort of down 20% off its highs as well.
But having said that, though, Gary, are there any particular stocks that you've identified then?
Looking at it, I mean, it depends. It depends on your earnings. I mean, you look for us. I mean, generally, it's the SAA trade. Samsung, Apple, and Amazon are the thing. That's what a hedge fund manager. There was a whole theme, about those are the 3 tech stocks to sort of look at, and that's because of the sort of the rising incomes and how much they're going to have access to the consumer. And it's something that it's a theme that you can look at. I mean, and it's the reason that Amazon's trading on that crazy price earnings, because it's a good story behind it. I mean,
what about Google?
Google, I mean, also, you know, like Google, it's, I mean, again, the actual median forecast for it is not particularly extended. I think it's about 16% you can expect from Google for the year. Overall, though, you know, it depends. I mean, it's Android devices. I mean, they're incredibly popular. And I mean, it's about how these companies almost put their capital to work at the moment. I mean, I also read an article, when you look at the likes of Apple and Google, I mean, the amount of cash that they just have lying around is more than most countries. So, I mean, it's how they invest that is to how your investment's going to do.
SAA trade, isn't that interesting? Not to be confused with
the airline. No. Samsung, Amazon and Apple.
Although the government of South Africa seems to think it's a good investment in SAA because we keep putting taxpayers' money into it, don't we?
Unfortunately. But very quickly, Gary, Naspers, buy, sell, hold?
Dangerous, because looking at the whole tech sector, you've had a breakdown through a long-term support line. It's what technical analysts would look at it and say a kiss goodbye, which is it's come to retest that break level. That means the next movement down. Naspers, I think, you know, it's a good business, but I think it's extended, and I think if it does start to fall, you're going to see a lot of panic, a lot of money pulling out of it very quickly. It can collapse, is what I'm saying. So for me, I mean, we were buying into the momentum on this break. We're steering clear at the moment.
High risk.
High risk, definitely.
Well, we learned a few things there. Kiss goodbye, SAA. Gosh, Gary, you keep them coming.
All the jargon.
Thanks so much to Gary Booysen from Vunani.